Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. In Part 2, we'll dive deeper into the hidden dangers, including legal risks, App Store bans, and why users abandon these platforms. Legal risks and the threat of global App Store bans. You can't have a social network if people can't download it. Today, Google and Apple are the ultimate gatekeepers of the mobile world. Both companies have very strict rules about content moderation and user safety. If a social network refuses to use moderation tools, it will likely get kicked off the Play Store and the App Store. Once an app is removed from these stores, it loses about 90% of its potential user base. Most people aren't going to go through the technical trouble of sideloading an app or using a slow mobile website. Losing access to the main app stores is a death sentence for a social media startup. It makes the underlying investment worth zero almost overnight. Furthermore, being banned from an app store creates a localized blackout for your brand. It becomes much harder to hire top talent or gain positive press. No one wants to work at a company that is being sued or blocked by the biggest tech firms on the planet. This cycle of isolation makes it nearly impossible for the platform to recover or innovate. New laws that hold platforms accountable for user behavior. The legal world is changing fast. Governments are passing new rules, like the Digital Services Act in Europe, which hold tech companies accountable for what their users post. These laws require platforms to have active systems for reporting and removing harmful content. If a company doesn't have these tools, they face fines that can reach billions of dollars. These regulations aren't just suggestions. They're mandatory for any platform that wants to operate globally. When a company ignores these rules, it drains its cash reserves just to pay for court cases. Instead of spending money on building new features, the platform spends it on lawyers. As an investor, your money should be going toward growth, not legal defense. The ghost town effect, where bad actors drive away real users. A social network is only as valuable as the people who use it. This is why the ghost town effect is so dangerous for investors. When a platform has no rules, trolls and bots quickly take over the conversation. They harass others and fill the feed with spam or aggressive political debates. Normal users who just want to share photos of their pets or talk to friends won't stay in that environment. They will quickly find a more pleasant place to spend their time. This leaves the platform with only the most extreme and difficult users. Such a small, angry group is not enough to sustain a billion-dollar business. Once the casual users leave, the platform loses its long-term value. Advertisers won't pay to reach bots, and developers won't build tools for a shrinking audience. A social network needs a healthy, active community to thrive. If the main activity on the site is just shouting and spam, it's already dead. The market just hasn't noticed yet. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.